Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Wednesday, January 10th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's look at the charts. Big picture, start with that and work our way into the day itself. Just a reminder that we came off several weeks ago of longer term resistance that this week is at 257.72, a descending channel top projected off that July high, a 6-month channel top. We were also expecting it as a 3 to 5 week objective following a buy signal in December, I believe it was. It could have been later November. In any event, 257.72 has contained longer term buying pressures so far, which is to say on a monthly basis, and below which the 179.22 channel bottom remains a 2 to 3, 3 to 5 month downside possibility. In fact, I think it is such a possibility that you could prepare for it. As I've been saying, following a test of the mid to upper 250s, there's low 260s at that time. But as if we push back into this zone again, you could perhaps either short the stock itself or reach for 180 strike, 175 strike out of the money puts that don't expire. I would go at least 6 months out, maybe a year out on that, just to prevent the time decay element from wreaking havoc on the premium of your option. So that is the big picture. And the question is, at what point might we expect 179.22 as a real objective? And I'm going to say, and I have been all along, that it would be a settlement below the 222.55 to 223.78 region, a combination rising channel bottom 2/3 speed line levels, line studies, that is now considered a 3 to 5 day target. Following the settlement Tuesday below the 239.34 channel top. This is a formation that actually held Tuesday's highs pretty well. And now that we've closed clearly below it, over the next 3 to 5 days, the 222.55 to 23.78 area expected. This has been a 3 to 5 week target. Over the last, I can count these bars, but I'd say over the last 2 full weeks, following the testing of channel resistance. And if over the next 3 to 5 days, we do not bounce back into the upper 230s and climbing, but actually then close below 222.55, that's when we enter, I'm going to say a 5 to 8 week sell signal. 3 to 5 weeks, I don't know, they're pulling apart. You got the low 220s climbing and the upper 170s descending on a steady basis. So I'm going to say that if we close today below 222.55, we should, by the middle of March or sooner, test the 179.56 descending channel bottom, where we can actually bottom out by that point in time through the second quarter and turn higher again. So I just want to reemphasize, I'm not expecting 179.56. I do think you can prepare for it as we test the channel resistance over the last couple of weeks. You can reach for out of the money puts that don't expire for some time, and then it becomes a clear target if we were to close below 222.55, say today. But for right now, I don't see that. 239.34 can contain buying through the rest of the week, and below which the 222.55 to 23.78 region likely over the next 3 to 5 days. On the way down today, still have 229.60, a downside 50% retracement level from that late October low against the more recent high from 2 weeks ago that can contain intraday selling pressures. If we break 229.60, we likely will, by the closing bell test the 222.55 to 23.78 region, where if you went short the market a couple of weeks ago and we were pushing into the low 260s long-term resistance, you can take profits and even reverse, because I think, I'm talking to 3 to 5 day swing traders now. If you buy the 222, 223 handle, you can hold out then for the 239, 240 handle within 3 to 5 days. That is your 3 to 5 day swing trade now inside of this band. But if you're a 2 to 3 week swing trader, you can buy 222.55 to 23.78. You can cover a short position, reverse and go long back into what is really the mid to upper 250s right now. You've got 255.90 on the daily chart, and as I started this video a few moments ago, 257.72 on the weekly chart. 257.72 up here in the support resistance column, and once again I'll say that if we test 222.55, you can prepare for a 2 to 3 week rally back into the mid to upper 250s and dropping daily. That is the dynamic. And of course, following a test of 222.55, we rallied back and closed also above 239.34. We're probably just 3 to 5 days away from reaching the mid to upper 250s. In fact, on that point, if we close today above 239.34, we've got a good low for the week. And I do think by the end of next week, we should reapproach long-term resistance at 257.72 on the weekly chart. So keep that in mind. If you are a 3 to 5 day swing trader and you're short now below 239.34, if we close above 239.34, my suggestion is at the very least to exit that short position, and you may consider reversing and going long. Within just a few days, I would expect 250.95, this former rising, 1/3 speed line, and within a full week of closing back above 239.34, a retest of this 255.90 channel top. You're probably well aware that there was a point a couple of weeks ago when we did close above this channel top on the daily chart. But at the time I was mentioning, not so fast. We really need to see a weekly settlement above the same formation on the weekly chart that this week is at 257.72. And yes, if we were to close above 257.72 at the end of this week, not going to happen, by a full 1% margin, that's 260.29 this week, then we enter a long-term buy signal that should, over the next half year, reach 352.93 and climbing. But we are a long way from that right now. Let me re-emphasize, the day itself. Heavy below 239.34. This is your short sale level, below which over the next 3 to 5 days expecting 222.55 to 23.78. Downside today, 29.60, likely to contain intraday weakness. And if we break 29.60, you should allow 222.55 to 23.78 on an intraday basis, where we could bottom out through the rest of January, and from here rally back to 39.34 within 3 to 5 days, and into the mid to upper 250s within 2 to 3 weeks, where we could once again top out on a quarterly basis and fall away again. We could fill the wedge out between 222.55 and 257.72 on the weekly chart for the next month or so. But if we do close below 222.55, that I actually think is the longer term path of resistance right now, no pun intended. But I'll go back to this chart once again, that the channel top here is 6 months in the making, a longer term resistance area that we've tested, and that the channel bottom at 222.55 is about 2-3 months at the most in the making. It goes back to early November, so 2.5 months in the making, and that is the weaker of the two. Still respectable for 2 to 3 week swing trading, but not for 2 to 3 month moves. Closing below 222.55 shouldn't come as a great surprise over the next week to 3 weeks, and if so, sets off a meaningful sell signal into the upper 170s and dropping daily, where we can bottom out through the second quarter. Is there anything else to say? I'm going to say one more thing to the upside today. If we push or open above 239.34, 244.68 is likely. That's right about here in the chart. And that is nothing more than a 3/8 upside Fibonacci over the last 2 weeks of activity. And I think that could be it for the day, perhaps. 46.45 and 48.59, I believe, are also kind of the half and 5/8 Fibonacci. But closing above 239.34, I think you should anticipate, once again, this 250.95 speed line within several days, and by the end of next week, a retest of 255.90 to 257.72 longer-term resistance. I think that is pretty much all that needs to be said. Please click like, share, subscribe. Check out wickedstocks.com for a 5-day free trial. You're going to like what you see, and if you don't, you can bail out for no cost to you whatsoever. I'll be back tomorrow with Thursday's Tesla, and you have a great day.